Okay, welcome back. Now that you know the basic financial reports, which are the balance sheet and the profit and loss, you must also learn three basic things before proceeding to recording your financial transactions. And those are number one, the accounting equation. Number two, it has to be double entry bookkeeping. And number three, the debit and the credit. The accounting equation only shows that assets is equal to liabilities plus capital, or in other countries, it is shown as assets minus liabilities is equal to equity or capital, which is basically the same. It only depends on which country you are accounting for. So it differs between the US and Australia, or UK, or Singapore, or Canada, but it's basically the same. Number two is double entry bookkeeping. It means that number three should always have a debit and a credit. Now, the debit and the credit are only positions. Debit doesn't mean good thing and credit doesn't mean bad thing, which is a common misconception among students. They thought that if you credit something, it is bad, and sometimes the notion is if you debit something, it is good. Not necessarily and not all the time. Although there are some indications to that, but you should always remember that these are only the left position and the right position in the journals. The journals is what we will explain to you later. Okay, so always remember this has to be an equation to your entry. It always has to be double entry, which is always there's a debit and there's a credit. So how can we explain that? Okay, let's go to the Xero application. Okay, so now we have the equation, which is how you explain the balance sheet. Going back to the balance sheet, you will see that there are assets, liabilities, and equity. So this is a basic balance sheet, adjusting the date to today, update, and then you'll see the balance sheet. So you have the assets, which are the company properties. We have the cash, the receivables, the equipment, the fixed assets. So the total is 14,000. The asset means everything the company owns. So it will show also the liabilities and the equity. The liabilities show how much external parties, or what we call creditors, own the company. And the equity shows how much the business owner owns the company. Let's just say out of the 14,000 total assets of the business, 12,000 is owned by external parties and only 2,000 is owned by the owner. Let's repeat that. The total assets of the business is owned by two entities, outside parties and the business owner. So you will get the idea that if you have a business, you don't really own everything of the business. Your equity is the amount of the total assets of the company which the business owner owns. And that is the result of every transaction in a business. So always remember the accounting equation. Now, the double entry bookkeeping, which is directly related to number three, the debit and the credit. So every time you create an entry, there is always a debit and a credit. In in manual accounting, which means whenever you don't have as an application, sorry, when you when you do not have the Xero application, accounting transactions or financial transactions are always created via manual journal or just plainly called journal. Manual is pertaining to software. So if you're doing everything without a software, all transactions are recorded by the journal. Here you are. So if we look at the journal, it always has the debit side and the credit side. Everything has a debit and a credit following the principle that it is always double entry bookkeeping. So let's take an example. I'm going to create an entry. Today, it is a sample. And let's just say the very basic transaction. For example, the owner donates his equipment to the company. So the basic, the entry for that is you debit the equipment. Don't worry about why it is a debit. We will explain it to you later. So let's say you have $1,000 worth of equipment put into the business. And the credit entry is owner's capital or owner funds introduced. So it's owner share capital, which is always also 1,000. It's always two sides, the debit and the credit. And there's always either the asset, liability, or capital in the equation, or any combination thereof. Okay, so that is the journal. In Xero, it's called manual journal. In manual accounting, it's called the journal. Then you click post. And all of the reports in Xero came from, all of the reports in accounting came from the journals. Let me show you where the journal came from. So we go to reports and you scroll down, you see the journals report. Click on that and you will see all of the records within the system came from the journals. So in this example, I put the date as today and then update, and you will see that there is a journal for what I have done earlier. See that? Office equipment, 1,000. Owner share capital, 1,000. And all the other entries are from the journal. But in an accounting application, this is done at the background because we also have the bank reconciliation here, and we also have the sales invoices for your income, and we also have the bills for your expenses. Basically, I just want you in this portion of the lesson to always remember the accounting equation. It is always double entry bookkeeping, and remember that the debit and the credit are only positions that you have to memorize where the accounts go. It doesn't mean positive or negative event or something bad or good. These are all positions that you should always remember how to use. Next up, we will discuss the actual transactions, how it is recorded, and how it affects the financial reports, which are your end product. Thank you.